It is Monday, August 17th. Okay, let's do a daily summary. Keep it short and sweet, right? So, a lot of considerable minor chop today, but we did end up settling moderately low, at least for the S&P, down 40 points, 0.5%. And I will note we did settle at 77.45, which is 3 points under the 10 MA. So this is the first close under the 10 MA since this big ramp in late July. Since the post Fed ramp. And momentum did weaken for a sixth day. It's not going to turn negative tomorrow, but it might do it on Wednesday. Wednesday we have the Fed minutes, and you got to wonder if a 10-year is breaking a new multi-year high, whether it's tomorrow or Wednesday, maybe Thursday. I'm starting to wonder again. Are we actually going to come back down to this little gap here, which is the old high of 76.20? Keep in mind, Friday is OPEX, so this old big bullish pennant here did play out to a new high, but um, this candle, this today's Monday candle, there's zero sign of floor. That does lean a little bit bearish for Tuesday. And as someone who's thinking about buying back SPCX again, or silver, I'm literally worried, as I should be. If I buy it around here, well, what if the market drops to here? That's not going to be good for me. So I'd rather be buying around here. But this is clearly not likely tomorrow. If it's got to happen, it'll happen on either Wednesday or Thursday ahead of OPEX. So it's something I'm wondering about. Certainly the cautious will be such. VIX picked up, but of course mostly it was because of a new week. And I've got it marked on here. But momentum might turn positive on Wednesday. If it does, then what are we looking at? 17s, maybe 18s briefly. I would note the upper Bollinger is starting to tick down, and that will be a wall in the 18s for the rest of the week. I'm be quite clear. So maybe we go up for a day or two, but still expect the VIX to remain broadly subdued into mid-September when we might have a rate hike. Might. I don't have a time machine, but I mean, the bond market. I said to my people in my space, I said, look, bond market is telling us rates are going up in September. I don't care what the Fed say. I don't care what the people on CNBC or Fox or Bloomberg are saying. I don't care what the various bloggers out there are saying. The bond market, which is what really matters, bond market is telling me rates go up in September 16th to be precise, which is here. Should cover bonds near the end, but why leave it to the end, huh? Because maybe I'll forget. Don't have any notes on me, so I'm just making this up as we go along. Look, 10-year via TNX, 4.728%. We're almost close to taking out this high, right? Right? I mean, that's clearly it could easily be done tomorrow. I think it's a good chance that we're going to take that high out on either Wednesday or Thursday, and if we do, the market's not going to like that because then you're looking at 4.8, maybe 4.9. Ouch, 4.9%. Hang on. Let's move on. But yeah. Look at that. Years stuck. At some point, we're going to break above 5%. Anyway, let's go through some individual stocks before matters are worse. Apple was down 0.8, kind of recovered a little bit into the close, despite the fact that the S&P was down a little bit. Archer Aviation cooled back, 3.5%. New cycle high for Agnico, because gold and silver up today. That American Eagle was up, but wasn't a great day for retail. AMD down 1.6. Amazon down again. That's a fifth day down. Um, Again, you can see we're almost trying to spike from this threshold. The most bearish target would be maybe the 50-day around 250 in a couple of days. I mean, that's only $10. It's 4%. That's doable. Again, that would assume that bond yields spike a little bit. Market Express down 1.8. Again, I'm going to skip through a few of these without even saying anything. Boeing down 2.5, but broadly that's a chop fest. Bank of America, actually look at that. Bank of America, new historic high, 65.22. It did settle down 0.9 now. And that is a bearish engulfing candle, which is bearish for Tuesday morning. And you got to wonder, can we somehow get to 56, which would be the old high, in September or October? I think absolutely it's viable. That would make for one hell of a buying level in my view. Because if you accept the rates of book going broadly higher, then Bank of America looks pretty good. Caterpillar, which links to my personal moment of the day. Caterpillar up 2.9%. Again, if the semicons are up, Caterpillar will generally be also up. I mean, really, we never did quite tag red gap. We came close a couple of weeks ago, but not quite. Of course, now the 200 days, 753, and it's going to be exiting red gap. Not this week, but next week. Tomiko stuck at resistance. Carnival down 1.4. Cleveland Cliffs up 3.4. That's a bullish engulfing candle. Coinbase up 1.4. Bitcoin was up like 2% last time I looked, but broadly it's a shot fest. Salesforce had a bearish engulfing candle last Friday. That played out down 2.7. A lot of the tech software stocks were down today. Disney down 3%. Google down 0.5. You could argue that short-term structure is a baby bear flag. I mean, look, if you have a 200-day orange gap, red gap, it's possible. Would I be long? Yeah, I'd be broadly long, but I wouldn't be short. Even if you're looking for a red gap, that's the risk reward on this isn't good. It's like it's still broadly strong. Home Depot down 0.3%. I will note that today's candle is a hollow red reversal candle. The candle suggests we'll be up tomorrow morning at the open. I think earnings will be mixed at best. Look at the volume today. People were selling ahead of earnings. I will note also that momentum turned negative on Friday, and there's nothing bullish there in terms of short-term momentum, but the daily candle's bullish. So yeah, maybe it opens up, but then we should look for a downside reversal. God, I'm jumpy this evening. Any little noise, I'm almost leaping. Oh, stress. IBM down 2%. Intel up 1. Yeah, much like a very similar chart to Bank of America, JP Morgan down 0.5%. Again, you could maybe, the most bearish target right now would be a retrace to the old high, 332, by the midterms, which isn't that bold. I mean, it could drop down to the 50-day within 2 weeks. It's possible. Private credit today had a problem. Yeah, they stalled on Thursday and Friday from this big resistance threshold down there, 4.5%. Not great. Yeah, forgive me if I'm just skipping through some of these. Lithium America is down 6.8%, 315. Again, I really like this one for next year. I'm just wondering how low might it get before the midterms? And I don't know. Is 267 a key low? I mean, it wouldn't take much more than a few days to get down to there again, right? But on any basis, to me, it's a damn cheap stock, and if you're prepared to hold it for at least a good 9 to 12 months, I think 6 is easy, and maybe $10. Yeah, maybe means late spring, early summer. So yeah, to me, that's a pretty. I'm pretty confident about this one. I don't own it yet for various reasons, but I do like it. McDonald's down 2.7%. Yeah, they were selling the restaurants and anything food related today for good reason. Meta had a bad day, down 3.5%. MP Materials down 0.4. Microsoft down 3% with the rest of the software. So you have orange gap here, but we do have this big old red gap where the 200-day and the 50-day. So the most bearish target for maybe Wednesday, Thursday, maybe we come down to here. I mean, that's 430. That's $50 down. That's 10%. I would accept that's a long way, but it's it's just about possible. Micron semicons up 4%. Nothing bearish there. Friday's black candle failed to play out. So this was a great head and shoulders. Didn't play out. There was a fake out here on a breakdown, and they whipsawed it back. I've said it to a few people now over the last week or two. The semicon crash. This was it. Late June, late July, 4 or 5 weeks. Some stocks for a week or two longer than that, but that was it. Semicons have already seen that crash. Annual earnings are $120. Divide that into 1,011, that gives you a P of about what, 8, 9? It's cheap. Netflix down 2.7%. It does seem that the 65s are a key low though, and I could accept that the bold will be looking for 96 to 107, maybe in late September, early October. Maybe that would sync up with the Anthropic IPO, which I'm hoping they'll do it. I want to see these big giants get IPO'd, then we can go digging for dirt in the accounts. Nike, what I've been saying for months, down 4%, new cycle low, printed 38.86 today. Terrible. It's got to get kicked out of a debt. Again, even the current valuation, it's still expensive. I think it's a PE still around 35 to 40. Nvidia fractionally down. Ondas cooling back. Oracle down with the rest of the software stocks. Oscar Health down 3.7 again. Doesn't have to go up every day. It can't do that, right? You have to get sporadic retraces. If you look at this wave, there's a couple of days down there, a day down there. A little bit of chop, and it surges again. Again, recent earnings were very good. I am a little bit twitchy about maybe if the main market had a correction between now and midterms, then this is going to come back to 22 to 20, which would make for a screamer of a buy in my view. But yeah, I wouldn't be surprised to see 35 to 40 in September actually. Gold would be buying. Pan American silver up. Short-term structure is a baby bear flag. That's a problem. So we can come down for maybe Tuesday, Wednesday, Thursday, perhaps. So maybe 44s. You see the gaps. There's a gap here. There's a gap there. There's a gap. That gap's been filled. Now we have an upside gap. Gaps galore. But yeah, 44s looks possible. That would mean silver's down a few percent at least. Palantir cooling back. Some of these daily candles look pretty bearish for a couple of days at least. Red cat down. Rocket Lab up 2%, but it is kind of stuck. All right, SpaceX. Let's talk SpaceX for a little bit. So yeah, if you listen to my space this morning, SpaceX was up 1% pre-market, opened flat, and then out of nowhere, boom. And yours truly was like, oh, okay, I guess I'll be selling because my position on Friday wasn't great. My entry was like around yeah, my entry was around 140-ish. Um, I got out this morning for maybe 140. I think it was somewhere. Maybe it's 143 and a half. Yeah, probably that. But I think I only caught a little bit of maybe a third, maybe half. And of course, it gets up to here, 149s, chop, 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 and it's leaning weak with the main market. Um, you know, cyclically, we could have a little down wave early tomorrow, which I'm guessing we do. If we do get a down wave tomorrow, maybe we should be looking for the 143s to 142s, which is just a teeny bit where I sold this morning. It's a pretty dynamic price action, all right. It's an interesting stock to trade. Volume today was a little bit higher than Friday. The thing that stands out to me is Friday's candle was spiky from the 135 threshold. That's pretty bullish. And I will say though, I will accept that we do have a short-term double top 149s. That's a slight problem. I'm open to maybe 140 tomorrow. The most bearish target maybe we back to 135 again, but I don't think it'll stay there for long. Big target is green gap starting at 176. I think the easy money in my view is from where we are now to 176. Once we get to there, that's the tricky part. What happens then? Do we just stall around 180, or do we just keep pushing for 200? I don't know, but I'm pretty confident about green gap. Maybe that doesn't happen for a couple of weeks. But today's price action was pretty good. Target cooling back. Tesla down 1%, stuck at teal gap. United Airlines down 2.5%. Again, oil was up 2.5% or so, so that's going to pressure the airlines back down. UPS down 0.8. If it takes out for 200 day, that's a problem. Exxon, new. That's a. It's not quite. Didn't quite take out the May high, but we're getting close, right? Got to be bullish oil. Speaking of which, look at that. So as of after hours, right now, oil's up 3% in 85 bucks. That's a pretty bullish candle. Next resistance is 85. Correction, 86 is teal gap, and that goes up to 90 bucks. So if oil does spike overnight for whatever reason, whether it's something that Trump says, or if the Iranians blow up a tank, or whatever it is, we could get to 90 bucks, 91 maybe. I don't have confidence to trade it right now. And you could argue that short-term structure was a baby bull flag, which is playing out. And maybe in theory, if that is a bull flag, which it looks like it is, then we're looking at maybe 90 to 91. Not Probably not Tuesday, maybe Wednesday or Thursday would be a natural time to peak out. But yeah, look at this. Momentum's increasing. Just a quick sneaky look at the weekly chart, which does. Yeah, look at this. This is this should be a concern to the equity bulls right now. We're not going to turn positive momentum at least until next week. But yeah, that's an issue. You see the kind of that little wave there. It's analogous to this little wave here on this divergent high. So, you know, they pushed it, they put in a lower high, and now this time they kind of pulled it back from 93 to 74. But momentum is getting very close to turning positive again next week, maybe. That's a concern because if oil spikes for whatever reason, that's a bad thing for equities. Gold and silver, again, I want to highlight them on a weekly chart because it gives some perspective on what's really going on here. Look at this. Weekly momentum is set to turn positive. If it doesn't do it this week, it's absolutely going to do it next week. So in theory, gold goes up now for some weeks into September. Maybe again, you can argue from a cyclical perspective, we maxed out in late February in terms of momentum. Bearish cross there in March, and we've been negative all until literally it's either this week or it's going to turn positive next week. Certainly, that's it. In my view, this does give me some confidence. We now actually have a kilo in July. That's pretty bullish. So we're 44.16. We need to clear. We need to really clear 4,500 to have some confidence, real confidence. And above 4,500, Upper Bollinger on a weekly is offering 48.92. So there's a good $400 upside right now across the next couple of weeks in gold. Starting to look rather good. And silver looks similar. It's not quite as strong. But it does look like momentum is probably going to turn positive next week. And it does look like silver has a key floor from the 54s. 55, 57 was not the key floor. It's actually 54s, this candle here. Sometimes stock charts has a little bit of a few quirks. It does not sometimes pinpoint the low. It was actually this candle here in July. Let's get the right number, shall we? There it is. 54.74 was the low. And that's after printing 121.64. What an incredible. I mean, even now it looks like, wow, silver was $121. And then and then literally got cut in half to 63. Well, almost cut in half a week later. Incredible price action. And you can certainly see now the volatility is done, right? It's stabilizing a couple of months, and now we're pushing up and away. See the breakout candle 2 weeks ago. Last week confirmed it. This week is just adding more to the confidence. So yeah, I was long silver until Friday morning and I bailed for a micro profit, but I would like to buy it back. So if silver is down on Tuesday, I will consider it. It depends on start of price action. You know, I'm a little bit twitchy about bond yields. Really, a little bit. Anyway, is there anything else? I don't know. I don't think so. What chart should we end with? Maybe we can find a bond yield chart. That one. Yeah. So this has just been settled for the day. Look at that. UK is 10-year 5.05, 5.08%. According to this, the US 10-year is 4.73. Germany is 3.23. Japan 2.93. There's lots of talking about Japan about, what are they going to do? What are they going to do? Just spend more money, print more bonds? What are they going to do? Raise rates? You know, but it's not even like one particular country. Rates are going up across the world. And again, I'm with Danica. I believe that we're in an early phase of a 3 to 4 decade sustained increase in interest rates, which is going to be a real problem for those people in debt. Now, yours truly has no debt, but I have other problems. Could be worse, I guess. But yeah, keep an eye on bond yields. If the 10-year does go above, does break a new cycle high tomorrow, which would be again, let's just check that one more time. Yeah, if the 10-year goes above 4.747%, that would merit attention. The market won't like that if we jump tomorrow. And again, I would keep in mind the Fed minutes are due Wednesday afternoon at 2 o'clock. That might be the excuse for an ugly end to Wednesday. So I'm a little bit twitchy. I want to buy back SpaceX and silver again, right? But I'm like, okay, what's the concern to me? Higher bond yields, and that the market maybe cools off for a couple of days into Thursday. So I'm a little bit worried about that. So I'm going to be cautious. But we'll see what happens tomorrow morning. Anyway, I will wish you a good evening and have a good Tuesday. Good night.